So we have to take another look at CCIV as we are down almost 5% again since we last talked about the stock a few days ago. Those pullbacks happened after we spiked almost 450% in January, currently pulling back a bit since some recoveries afterwards. So what we are going to do today is give you an updated insight into what is happening to CCIV's stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is absolutely crucial to consider before buying the stock, make sure to stay tuned. But before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, so in the case of CCIV, we're looking at a for investors extremely interesting SPAC, which brings the fairly popular EV company Lucid Motors public. But the absolutely crazy thing about the company is the massive hype surrounding it. And there are actually a few very important aspects that are causing this enormous hype, especially from retail traders, with the first one being the general space it is competing here. In fact, there were a ton of stocks skyrocketing in the EV sector, being up some crazy percentages last year. As there are so many companies in this business, however, with literally every single car producer also switching to electric vehicles, if they haven't already, it's super hard to compete. So what made the stock go up so much in the first place, and this is crucial to consider for the prediction at the end, is the hope of investors that a company like Lucid can actually hold up against giants like Tesla. And reading through some articles online, you'll quickly find people pointing out that would never be possible, but they haven't considered one extremely important aspect: you can't compare Tesla and Lucid being the same. As mentioned before, while Lucid, for example, is starting on the high end with its Lucid Air Dream Edition, costing $169,000, Elon Musk said multiple times that the focus of Tesla is the cheaper end of the spectrum, trying to make their cars as affordable as possible. And the ultimate result is of course way less conflict between the companies and a major, if not the biggest, player in the EV space being a way smaller challenge for Lucid Motors. But, and this is also very important to consider for our prediction at the end, Tesla is currently way more experienced and ahead of Lucid. In fact, Lucid hasn't even delivered a car yet. The only thing we pretty much got from Lucid are promises for the future. The company, for example, expects to have vehicles on the road before 2022 begins. Assembly of the company's first production model, the Lucid Air, will occur at the newly built factory in Arizona in the second half of 2021 to build the recently reported 9,000 reservations for the Lucid Air. But if the company actually holds true to these promises and is able to deliver its first vehicles in the mentioned deadline, some massive gains and jumps in the price are almost certain. Taking a look at the future, over the next 5 years, Lucid also foresees huge growth in production, including the introduction of an SUV in 2023, while expecting to sell about 48,000 vehicles in 2023. As said before, considering management's forecasts for the next 5 years, it's no wonder that investors are excited about Lucid Motors. But don't forget the competition. Even for a company like Tesla, it will be really tough to stay ahead, so you can assume that Lucid will face even bigger challenges. Additionally, the fact that it was the management that has supplied the projected financial figures is critical to note. There are a ton of companies that have provided ambitious earnings forecasts to drive investor enthusiasm, yet who have failed to achieve their own guidance. So to sum it all up, Lucid Motors definitely has huge potential if it can prove itself against giants like Tesla. This, however, is definitely not as unlikely as you would think due to the different customer targets of the companies. Buying right now, however, is very risky, which is why we recommend waiting for the first actual cars to be delivered and the following either negative or positive news before buying or adding more stocks. If retail traders, however, continue to hype the stock up as well, some short-term growth or some new spikes in the price are very likely. Alright, with that being it for today's video, thank you very much for watching. If you like this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot and see you next time.